When every customer dollar hits your bank account and no taxes are withheld, it feels like you are in the money. Until the day that the IRS reminds you it's time to pay the taxes. No money's been withheld, maybe no estimated payments have been made, and boom, April 15 comes, you owe tens of thousands of dollars. How in the world did this happen? Well, it happened because you didn't do some things back in December or November that would have significantly reduced your taxes, and we're going to talk about those today. Hey, I'm Jim Flouse. I've been doing taxes for 20 years for self-employed small business owners, have prepared thousands of returns, so I know what to do when it comes to reducing taxes. It's a matter of reducing your taxable income. There's nothing wrong with doing everything you can to take every legal deduction, offset, loophole, credit, every legal strategy available you need to employ in your favor. And you know what? You don't have to be a big business to significantly take control of your taxes. I often hear from people, I'm so small, there's no reason to do any tax planning. You're thinking in the back of your mind, you're not big enough to matter. The fact is, you're on the IRS radar the day you have a business license. So whether you earn 6 figures, 7 figures, 10 figures, the same IRS rules apply, the same planning can be done to take control of your taxes. So please smash that subscribe button, share this information, let's get into it. Let's talk about the 10 things you can do right now to reduce your taxes. I'm talking between now and December 31st. So, number one, you've got to determine with clarity what is your taxable income. Now look, there's no guesswork here, no estimates, nothing done on the back of a napkin, no legal pad, no spreadsheet. I'm talking about a serious accounting software that's calculating what is your taxable income. That's job number one. You don't do anything else until you know you've got all your deductions in place, all your expenses, everything's reconciled. You've got an accurate number of what is your taxable income before you do anything else. Step two, prepay any expenses that would come out in 2026. Get those into 2025. So example, January rent. Well, pay it in December. Why? You're pulling it into this year and now it's a deduction. It's a deduction, it's reducing your taxable income, and that's the way you start taking control of taxes. Dues and memberships, other prepaid items, insurance. Hey, if you've got accounting fees that you're expecting to pay in the first quarter of 26, pay them now in December of 25. Your accountant will like it, and so will you, because it will reduce your taxable income. 3, lock in your entity structure. Review, am I doing this right? LLC, S corporation, C corporation, partnership, sole proprietor. What is the most advantaged for you? This is the single biggest mistake that taxpayers can make, is having the wrong entity. Number 4, adopt an accountable plan. Have you ever heard of this one before? An accountable plan is the way that you can reimburse yourself for expenses that you incur for your business. If you're no longer a sole proprietor, you're not eligible to take office and home expense. You can't just write off things because you spend it. If you are, for example, an S Corp, now you're an employee of that entity. Anything you're spending on telephone, home office expense, the internet, mileage for your vehicle that you're using in behalf of the company, you should be submitting those expenses to the company in what the IRS calls an accountable plan. You account for your expenses, the company reimburses you, the company gets the deduction, and it is not income to you as an individual. So get an accountable plan. Number 5, maximize your retirement deductions. For example, if you're a business owner and you have a simplified employee pension plan, you can turbocharge that deduction that you used to take for an IRA contribution up to 25% of your net income. In as much as $70,000, you can push from this year into future years, meaning your taxable income for 2025 goes down. So maximize contributions to a SEP, a 401k, a solo K, whatever it is that works best for you. Sit down with a tax pro, decide what's best. Number 6, expense your equipment purchases, okay? Section 179, 100% bonus depreciation. There's ways you can now write off your equipment purchases this year. You don't have to spread it out over 5 years, 7 years. You can take it now. Do this if your cash flow is permitting. Don't just go out and make some crazy purchase because you're going to get a deduction and then you end up cash poor or paying on a debt load 5 years for some vehicle you couldn't afford anyway. If it makes financial sense and it makes tax sense, make those equipment purchases now and place the equipment in service before December 31st. 7, hire your kids. Okay, your children as young as 7 years of age can work in your business. Think in terms of things like social media management, organizing files, cleaning up the office. It has to be legitimate work, but here's the benefit. You can pay them up to $15,000, actually a little more this year. That means your income goes down by 15, their income, which is tax-free, goes up, but you have reduced taxes, you've shifted money to children, and now that pre-tax money can be spent for things like summer tennis camp. Or check whether you've paid enough taxes. So if you're married and your spouse has W-2 income, check the withholdings for federal taxes. If you've made estimated quarterly payments, add up what those amounts are. See what is already in the system at the IRS toward your tax liability. And if you've not paid enough, number 10 is prepare for the deadline. I'm not talking about April 15th. If you have a tax liability that you're projecting after taking all of these extra steps to minimize your taxes, and then you've paid in a certain amount, what's that gap? The tax is due on that gap, not April 15th, but January 15th. Remember, you're self-employed, you're expected to make estimated quarterly payments. So the income you earned in October, November, and December is supposed to be paid on the 15th of January as your fourth quarter estimated payment. And don't forget your state, if your state also has income tax. So anchor on this. The best way to reduce your tax is to reduce your taxable income. And many times it's the things you do in the last month of the year that allows you to take control of those taxes, take the steps you need to reduce Uncle Sam's tax bite, and then make the estimated payments so you're not going to pay penalties later when you do file that return in April. I'm Jim Floss. I hope you found this helpful. Please smash that subscribe button and we'll see you next time.